Hello viewers, my name is Ashok Sen Gupta from School of Management Sciences, Lucknow. Friends, today we will discuss the topic capital budgeting decisions. This is a topic belongs to the subject Financial Management and Corporate Finance in MBA course. So, in this topic we will able to understand what is capital budgeting, what is its important, what is it we need. So, let us start the topic. What is capital budgeting? Capital budgeting is a process of making investment decisions in capital expenditure. A capital expenditure may be defined as an expenditure that benefit of which are expected to receive for a period of long expended on year. Expenditure capital in nature involves non-flexible long term commitment of fund. So, first of all, what is capital budgeting? Budgeting means estimation of future estimation of funds either receive or expense. Capital expenditure means capital budgeting means to understand how much amount we will need to invest, where to invest. Decision making related to the capital expenditure involved in capital budgeting. Capital investment or capital expenditure gives the benefit to the investor after some period of time. Initially we do not get any kind of return, but later on we will get the return continuously. It is a non-flexible, we cannot change after taking the decision making or commitment. So, it is very important, we cannot change each and every time, we have to take a decision making which is very important. We have to take the decision making after several rounds of meeting with senior officials, then we take the financial decisions or capital decision making. So, capital decision or capital budgeting, capital expenditure is a nature of expenditure which is give the benefit to the investor in long period of time, but initially it need heavy amount for investment, heavy amount of investment. Expenditure decision also called long term investment decision. Capital expenditure involves a planning, controlling of capital expenditure. Example, cost of acquisition, cost of addition, cost of replacement, research and development. These are the examples of capital expenditure where we invest in acquiring any asset, acquiring any kind of land, additional expenditure in our business. We need to expand our business, we need to expand our manufacturing unit. This is a capital nature. Initially we put lots of money for the installation, after that we will get the return. Cost of replacement, if you are replacing any kind of machinery in your factory, it is a capital nature, because from that machine we will get the production, it helps in production. Not only machine, any kind of replacement which is capital in nature, which is not flexible, its cost of replacement or it is known as capital expenditure. Replacement due to the obsolete, replacement due to the breakdown or change in technology, or are the part of capital expenditure. Research and development is one of the important part of in capital expenditure, and most of the industries especially pharmaceutical companies sector, pharmaceutical sector, defense sector, chemical sector, So, all these type of companies which are involving in these sectors having a huge amount invest in research and development. Like ISRO is the Indian Research Space Research Organization. Most of the expenditure are related to ISRO is based on research and development. Any kind of pharmaceutical company always try to manufacturing the product or medicine which is helpful for the human being, but it is involve huge research and development, and this research and development incurred a cost which is capital in nature. So, why we need capital budgeting? Why we need capital budgeting? First, whether or not fund should be invested in long term projects. We have to take the decision making whether or not fund should invest it in long term projects. These decisions have to be taken by the top management strategically, and they take the decision making whether we have to put a particular fund for any project or not. So, we have to analyze, we need to analyze the project, we need to analyze the return of the project, we need to analyze the competition, we need to analyze the government or overall business scenario, business environment before invest in any project. So, we have to take the whether or not fund should be invested in long term. Long term means it not give the return within a year, it take long time, especially in the cases of like dam, manufacturing of dam, construction of dam, not manufacturing, construction of dam. It take long time, nuclear power station take long time, satellite design it take long 5 years, 6 years, taking test and test, long test, taking trials and lot of trials, after that they finalize, they take long time. Reliance Industries invest lot of money in for Reliance Jio. When they launch Jio phone, before that they invest huge money for a particular time period for 3 years, 5 to 5 years. They establish the network, all the cablings, all the things, then they launch the Jio, and when the Jio came in the market, it is one of the most favorite brand in telecom sector, one of the most, because of their scheme whatever they, but it is a capital busting. Long term projects we have to think first, either to invest this type of project, long term project, which type of project we required, how much money we will required, all these things. Second, analysis the proposal for expansion or creating additional capacity, this is also important. Analyze the proposal of expansion and creating additional capacity. Sometime any business unit get additional production, you can say demand, additional having the additional for a particular period of time. So, for the particular period of time they have to take decision either to increase the capacity or load on the existing machineries, or they have to invest on new machine or construct a new unit, establish a new unit. Take an example, if a cement firm, if a cement company get an export order, so what will be the decision making? Either they will establish a new unit to produce the export order, or they increase the production capacity of existing unit. They have to think about that, the management have to think, because export order is not a continuous process. If they have a order of 5 years, continuous 5 years, having a tender of 5 years, 10 years, or a agreement to export the cement to the particular project, and this is for the 5 years to 10 years, that time they required an additional unit. But if they require, they have a order and which may be finished after 6 months, and there is probability or possibility of getting the new order is very low, then do not need to invest in new unit, invest or increase the capacity of existing production. So, it help to maintain the fund. So, this kind of decision making or need of budgeting in capital investing. Fourth is to decide the replacement permanent asset. This is also important part, because replacement of asset need a capital and sometimes huge capital, but if an asset is damaged fully and not functionally properly, it will, and if its help replacement helps the company to increase the production, then the company must replace it. Otherwise, if it is repairable, then they go for the second alternatives. So, permanent replacement is also a capital budgeting process. Fourth is to make financial analysis of various proposals regarding capital investment. So, when management decided for capital investment, there is a lot of brainstorming work among the top management. They received lots of proposals. So, it is also important to analyze the financial analysis of various proposal, which proposal is suitable, which proposal gives the maximum return, which proposal is low risky, which proposal is in demand. So, all these things have to keep in the mind during the capital investing. So, these are the 4 points which are required to understand why we need capital investing. Now, importance. So, importance of capital investing is, it is a large investment or huge investment. Why it is important? Because in capital investing we are not talking about a small investment, we are talking about a huge investment. Establish a cement plant, establish a oil refinery, establish a textile mill, connecting road from one city to another city, expressways. It is in news that our Ganga expressway going to inaugurate after a few days, and the estimated budget is 32,000 crores. 32,000 crores is a huge budget and huge capital expenditure. This expenditure related to the infrastructure development. This kind of development helps to the economy, especially for transportation, movement of the man or machine. We can move one place to another easily, and finally, when this expressway going to run, government earn from taxes and is helpful to the economic development. So, it is large investment. So, important of capital busting is large investment. Second, long term commitment of fund. Capital busting decision is a long term decision making, in which initially in initial phase we need to be patient. Initially we just invest in the project, we need to invest in any kind of project. Until and unless the project completed, we will not get any return, but after completion of the project, return is continuous for a longer period of time. It is a long time return, it is a long time return. Take example, if any company establish a textile mill or oil refinery or any big cement plant or a steel plant, it take 2 to 3 years to complete the whole project from top to bottom, from each to complete each and everything to being in operations. When company find out that now the project is able to operate, they start the project. Initially 2 to 3 years there is the thing as in a return, but after that when they start manufacturing cement or textile or cotton, spinning any kind of thing, the return is for the longer period of time, longer period of time. We have a lots of examples. In cement companies we have a Birla, JK, Mayer, Prism, SEC. So, Ultratech. So, these kind of cement plant having a huge investment, but they are running from 20 years, 30 years. Birla Cement, I quote example, Birla Cement in Satna. Satna is a place in Madhya Pradesh which is very famous for the cement plant because of its natural resources. So, most of the cement plant are in Satna district in MP, Madhya Pradesh. Birla Cement plant was the first and it was running since 1960s. Little bit replacement is always going on, little changes or change in the, you can say, technology is always a part of the operations, but since that it gives lots of employment to the people, their social development, revenue to the government, and it is running for. So, therefore, it is a long term commitment of fund. Third is irreversible nature. If we committed a capital expenditure and we start investing fund, it cannot be reversed. It cannot reverse, because it's, if we think about to reverse that, it create a huge loss for us, huge loss for ours. So, it is irreversible. Long term effect on profitability. When we invest, sometime we take a loan debt from the outside and we have to pay that installments for longer period of time, it affect on its our profitability, but later on it's add the profitability. Difficulties in investment decisions. Yes, of course, because it is huge decision making, it will take lots of think process among the people who are in top management, and they are taking final decision after long period of time. And last is national importance, because it is a capital in nature, it is also helpful for the nation in case of employment generation, social rehabilitation, social development, use of land resources, use of natural resources, other natural resources, and addition to the revenue as a tax to the country, and it helps to the overall GDP of the nation. Capital busting is a whole process. Capital busting is a whole process, and the first process is investment proposal, second is screening, third is evaluate, fourth is fixed priority, next fifth is final approval, sixth is implement the proposals, and last is review performance. This is a whole process. So, let us understand this process one by one. Investment proposal. We in capital busting, first stage is investment proposal, in which company received lots of proposal from the other third parties or different proposal from project department. So, they work on that and start new kind of venture, new kind of project. So, investment proposal, the proposal or idea about the potential opportunity may originate from the top management or maybe come from the rank. Top management having the idea that we have to grab that opportunity and we have to move that kind of opportunity, and we get the rank. One of the example I want to share you, few days back there is a news in Times of India that Reliance going to acquire Just Dial. This is a capital expenditure because it is acquisition, and Reliance is doing that because they are finding opportunity in online business. Just Dial is a platform, Just Dial is a platform where to promote the online businesses. Reliance is going to acquire the. So, this is a kind of new project proposal, and they finalize that. Now, we are going to the, but before finalization they are having a lots of brainstorming work. Second is screening the proposal. After receiving the lots of after receiving the proposal, various proposal, we have to screen that according to the profitability, according to time period, according to the risk, according to the category of the sector, in which sector we want to go for a expenditure. Third is evaluation of various proposal. After screening the best one, we select some for final evaluation. We find out the budget, propose the budget, process the evaluation, profitability and various proposals. Next, after evaluating the various proposals, the next is fixing priorities. Which is our priority, which sector we want to move, what is in demand, which kind of product or services is in demand. So, we are selecting our priorities after evaluating the various proposals and select the best priorities. Final approval and preparation of capital budget. After get the final approval that we are going to start this kind of this project, now it is time for the preparation of capital budgeting or capital expenditure budgeting. In this process, total team of project department, various department come together and they are work to find out what will be the budget, what will be the estimated future expenditure, what will be the estimated future revenue from this project. After finalization of the project, we the capital budgeting have been taken out. Second last is implementing proposals. Preparation of capital expenditure budgeting are incorporate of a particular proposal in a budget does not self authorize to go ahead with implementation of project. Only budgeting is not a final thing, we have to implement that budgeting process, budgeting criteria in the project proposal to finalize the project. Finally, performance review. After the last stage, after completion of the whole budgeting and evaluation of performance of the project, we review that what was our decision making, either we failed or we get the proper revenue, what will the time take to complete the project, is our decision making is good or we fail to take a good decision. So, review performance review always help to the department, each and every department, to control the errors, to control the error. So, there are it may be a error of human or it may be error of decision making. After a proper performance review, it is very important to understand and control the things. So, it is important part is just last part is very important, performance review, because always review of the performance help to the firm or management to understand their loopholes, to understand their positive and negative things, to understand what are the other opportunities, what difficulties we were faced, and how we control that and how we manage that difficulties. So, friends, that is the final recap of all the lecture. Today's lecture is based on the capital budgeting decision, and this capital budgeted decision we understand that how we, what is capital budgeting. In capital budgeting decision we understand that capital budgeting is a long term in nature, it is irreversible, it is it is heavy investment, it is a heavy investment process, it is never reversible. It is important to take the decision making. It is also important to analyze the various proposals. It helps to decision making of replacement of permanent assets. It makes financial analysis of various proposals. These are the some example of capital expenditure: cost of acquisition, cost of addition, cost of replacement, research and development. We need capital expenditure, capital budgeting to in large investment, long term commitment of our irreversible in nature, long term effect on the profitability, difficulties in investment decision and national importance. This is a process of capital budgeting decision making. So, finally, thank you for watching this video. Hope you understand this topic. Thank you.